Good evening, everyone. Time for this week's silver update. This is the weekly chart of silver. I've decided to take a long view and look out at the long-term chart of silver. You can see that we are still in a bull market, the long-term trend channel being maybe something like this. So you can see we are still in a rising market, even though we had a tremendous breakout to the upside, a correction back down into the middle of the primary trend channel, and before that we had a breakdown. But this is clearly still a bull market. If you want to see what a bear market looks like, it would look something like this, or this, or something like that. So to get a bear market here, we're going to have to go down, keep going down, and just not rise. I don't think that's going to happen. I think that we're forming a pattern, something similar to what happened in 2008, 2009. I don't think the government's going to stop printing money, and we're going to look at that when we get to the main story. So let's clear off the indicators and put up the MACD. And I wanted to go to the daily first. The daily chart, we've actually crossed to the negative side on the MACD. You can see here we're actually on the negative. Now that's fairly unusual in a bull market phase. You can see we just briefly did it here in 2011, and that was a snapback rally, and of course we went to record high prices except for the 1979 high. So it happens, but it's not a normal thing. If you're in a steadily rising bull market, normally you just get dips below the zero line and then a subsequent rally. On the weekly, you can see that we have turned down below the zero line. Now, my prediction was, when I was looking at the weekly MACD, that we would do something similar to what we did back in 2008. You can see that we crossed above the zero line just into positive territory, and then we turned down, bounced off the zero line, and you can see that that was the beginning of this long-term rise, and then ultimately an explosive rise. So the question is, are we going to turn up like we did back in 2008? I think we will. It's interesting that we turned down before we hit that zero line. Of course, the key chart pattern was made with the smackdown that occurred at 3750, a very significant symbolic smackdown that they did with the Bernanke speech and with Ron Paul showing him a silver coin. So I don't put a lot of stock in that, just because that was clearly an orchestrated event by the powers that be, and they have, in my opinion, pretty much shown their hand that they are interested in manipulating the price of precious metals, because precious metals, specifically silver, are their Achilles heel, as David Morgan has pointed out. That is their financial doom. Because the precious metals will expose them for what they are. Now, that brings us to the story of the week, and that is a story from Zero Hedge, and that came out today. And it's about another tungsten-filled bar that was found in the UK. Now, I don't know if there's a lot of significance to this. It could just be some rogue operator, but then again, it could be all the bars in the central bank's vaults. We don't know, because they won't audit those. So that's just for people to decide what they believe. But anyway, to read this tungsten-filled bar story, the last time a story of tungsten-filled gold appeared on the scene was just 2 years ago, and involved a 500-gram bar of gold full of tungsten at the W.C. Heraeus Foundry. the world's largest metal refiner and fabricator. It also became known that said gold bar originated from an unnamed bank. It is now time to rekindle the tungsten spirits with a report from ABC Bullion of Australia, which provides photographic evidence of a new gold bar that has been drilled out and filled with tungsten rods. This time not in Germany, but in an unnamed city in the UK, where it was intercepted by a scrap metals dealer and was supplied with its original certificate. The reason the bar attracted attention is that it was 2 grams underweight. Upon cropping, it was uncovered that about 30 to 40% of the bar weight was tungsten. So 2 documented incidents in 2 years, isolated or indication of the same phenomenon of precious metal debasement that marked the declining phase of the Roman Empire. Only then it was relatively public for anyone who cared to find out on their own. Now, with the bulk of popular physical gold held in top secret private warehouses around the world, where it allegedly backs the balance sheets of the world central banks, yet nobody can confirm its existence nor audit the actual gold content, it is understandable why increasingly more are wondering just how much gold is there. From ABC Bullion. And this is the email. Here's the picture of the tungsten rods inside of the gold bar. And there's another picture. You can see it's from metal ore. And there's another picture. Finally, some observations from Paul Mycrist on debasement. Let's consider the run-up to Rome's hyperinflation. I think this comment from jaysromanhistory.com, quote, good money, bad money, and runaway inflation, resonates with what's happening in the U.S. today. Severus Alexander, 222 to 235, tried to reform by going back to the denarius, but once started, this path of runaway inflation and financial irresponsibility on the part of the imperial government proved impossible to control. It also seems that the hyperinflation was replaced by some kind of banking crisis, which is an interesting parallel from demise and fall of the Augustan monetary system by Konrad Verboven. Quote, papyri show that it was common for private individuals to deposit money at a bank and to make and accept payments through bankers. Bankers in the West disappear from view around the middle of the 3rd century. A famous papyrus from Oxyrhynchus from 260 CE shows exchange bankers closing in order to avoid having to exchange the imperial money. The Strategos ordered exchange bankers to reopen and accept all genuine coins and warned businessmen to do the same. In 266 CE, we find for the first time transactions being expressed in Ptolemaic or Old Silver as opposed to New Silver. The chart shows how inflation remained relatively subdued until a tipping point was reached in the late 260s AD. Monetary systems can absorb substantial abuse before there is a dramatic impact on the price level. For example, the debasement of the coinage was already accelerating in the early part of the 3rd century AD before plunging in the latter part. Indeed, the chart below, apologies for the quality, only shows the trend up to 253 AD. By around 290 AD, the coins were only dipped in silver to give them a coating, less than 0.5%. And there's the chart. So, a very interesting article on tungsten, which is back in the news. It's not really surprising. We don't know, as he pointed out in the article, we don't know how much gold the central banks hold because they refuse to allow their vaults to be audited. if we jump over to the periodic table, and I've gone to this before, you can see that these are the, and forgive me for mixing up atomic numbers and atomic weights, which roughly correspond, so I'm just going to use those. But you can see that the atomic numbers on gold here is 79, and you can see that tungsten is over here at 74. So there's about 5 difference, and again, we're not going to go into the way you calculate the weight of neutrons and protons. We're just going to assume that this is the difference. And then if you look at silver, you've got the number is 47, and then the one that is always given as the potential is molybdenum, which can be used. So there is going to be a difference. You're never going to be able to have the exact same volume. For example, a 1 kilo bar of tungsten will not have the same water displacement as a 1 kilo bar of gold, because it's impossible. Also, a 1 kilo bar of silver will displace less water than a 1 kilo bar of molybdenum, simply because it's denser. So that's the key idea behind how you detect drilled bars, and that's the reason why they use these relatively equivalent metals, why they don't use these others. You can see platinum obviously is more valuable than gold. Iridium, I believe, is very rare. Osmium, rhenium. So these are very rare, and this is more expensive, so you're going to have to go with the next one, and then these are going to be liquids, or just not usable. You can see that lead is actually closer to gold, but I believe that it's because that lead is so soft in its natural form. So tungsten is going to be the choice metal to counterfeit gold, molybdenum, silver, and that's going to be what they're going to drill those bars out and fill them with. Now, I wanted to take you to an article about the edges on coins, and this has to do primarily with silver. Silver, of course, being the people's money, has always been used in circulation and by the merchants. So one of the things that you had with silver was the shaving of coins, and that's the reason why you have edges on coins. So I'm going to read a little bit of this. Probably more than 3/4 of circulation coins across the world have either plain or milled edges. Usually the smallest denominations have plain edges, and the higher denominations will be milled, except in the case of multi-sided coins, which are often with just plain edges for simplicity of manufacture. The use of edge milling was first introduced on higher value coins to make it easy to know if some precious metal had been filed from the edge of the coin. Even today, very few gold coins have plain edges. In modern times, one very useful reason for this feature is to help those with impaired vision distinguish between one denomination and another. The use of fine and coarse reading is often to help with this too. The milling itself can vary between different coins in a few ways other than the obvious fine and coarse varieties as already mentioned. The shape of the milling, the shapes of what one might call the crest and trough, can vary. The two basic varieties of those with square troughs and those with V-shaped troughs. These variations are only of interest when coins are known that differ only by such a feature. Another variation on the milled edge is that with slanted serrations, slanting to the left or right. Another is where the serrations intentionally do not reach from one side to the other of the coin's edge. These two variations on the milled edge theme are very seldom, if ever, encountered on coins of the last 100 years or so, and they're therefore of little interest to me. So that goes into the edging of coins. So if you ever wondered why you have the serrated edges on your coins, whether it's your dimes, quarters. If you remember, the penny and the nickel have a smooth edge, then beginning with the dime, the quarter, the half dollar, and the silver dollar, and then of course the gold $10 and $20 gold coins. These all have the serrated edge, and the reason why is to prevent the shaving of coins. So the main point is that with this tungsten filled gold bar story, you can see that the more things change, the more they stay the same. We've had corrupt, tyrannical, overzealous, and irresponsible governments for thousands of years, and the way they deal with their profligacy is by counterfeiting the currency. It's a traditional, universal, and it's never changed, and it never will change. And one of the ways they deal with that is by creating fake gold and fake silver. With the gold, you're going to drill it out and fill it with tungsten. With the silver, you're going to shave the edges and make coins that are worth less than they're supposed to be worth, and be able to create new coins from the shavings. Of course, the point is, none of this is new. This is something that's been going on for thousands of years, and it's just an indication that the governments of the world are hitting the wall, and they're running out of stolen money, money that they steal from people who work hard, and they attempt to give it to people who don't work, whether that be corporations or people who just simply don't do anything at all. And that's eventually going to bring them to a breaking point where they run out of money, and ultimately they're going to have to counterfeit that money. So the way you protect yourself is by stacking physical silver, and especially physical silver coins, because they're very unlikely, especially the 1 ounce and the half ounce, and the smaller denominations are very unlikely in silver to be drilled out and counterfeited, simply because it's more expensive to counterfeit silver than it is to just mint it. So that's the main reason why you want to stack physical silver. Well, that's not the main reason, but that's one of many reasons why you want to stack physical silver, is that you're much more likely to get what you're buying. It's very unusual, and it may be becoming more common in the future for counterfeiting to occur with silver. But at the present time, as far as on the coin level, maybe on the 1,000-ounce bar level you could have some counterfeiting, but on the coin level, drilling and counterfeiting is just it's not a profitable endeavor, so you're not likely to see it. So you still have time to stack physical silver, and as the governments of the world are hitting the wall, you can protect yourself with physical silver. And we'll talk to you next time.